Hey, how you doing? This is Adam Post, publisher of more than 1,000 comic books and marketing expert covering ESG scam collapses as millennials and Gen Z cancel woke capitalism. Let's get into the story. Before we do, please be sure you are subscribed to the channel. Click the bell for notifications. Give me a thumbs up. I really appreciate you guys. From the Daily Mail, Millennials and Gen Zers ditch woke capitalism. Support plummets for socially conscious ESG funds as TikTokers bash scam diversity targets and greenwashing. From Mail Online, market insiders ditch woke capitalism. 87% say funds focused on tree-hugging social causes will lose money. 2/3 write off ESG as a passing fad. Also from Daily Mail, woke capitalism's comeuppance. Investments in trendy ESG assets collapsed by $5 trillion in just 2 years, as Republican backlash and tumbling wind and solar stocks upend the sector. Incredible, but there's a double-digit drop-off in support for ESG funds among younger investors. They're allocating capital more like baby boomers, according to research. Millennials and Gen Zers are famous for urging businesses to lead the way on making society fairer, workplaces more diverse, and cutting emissions of planet-heating gases. That could be changing, and fast. Research shows that younger investors are turning their backs on firms that tout trendy environmental, social, and governance efforts, which is often mocked as woke capitalism. A survey of some 1,000 investors found that Millennial and Gen Z respondents had started to allocate their money more like baby boomers, who are keener on turning a profit than lofty principles. This all comes as social media influencers discuss ESG on TikTok and questions on whether it makes good returns on investments or amounts to little more than greenwashing. Professor David Lacker of Stanford Graduate School of Business said support for ESG values among younger investors fell by double-digit percentages between 2022 and 2023. Previously, young investors said they were very concerned about environmental and social issues and wanted their fund managers to push for change, even if it meant a loss of personal wealth. That sentiment has changed dramatically, he added. When the numbers come in, people start saying, wait a minute, this is my money we're spending. This isn't just some abstract government money. I don't want to lose my money. I need to retire. That's correct. In the survey, preference for ESG investing among millennials and Gen Zers, who are aged between 18 and 41, fell sharply. The share of those who said they were very concerned about environmental issues dropped from 70% in 2022 to 49% last year. The share of those who were worried about social issues fell from 65% to 53%. According to the study from Stanford University, the Hoover Institution, and the Rock Center for Corporate Governance. The share of millennial and Gen Z investors who said they wanted their fund managers to promote ESG values also tanked, from nearly half of them in 2022 to about a quarter of them last year. Their investment preferences became much closer to those of baby boomers, according to researchers. The trend comes as millennial and Gen Z TikTok users who share financial advice on the platform express unease about ESG. The user known as Cat Hill to Hill this month asked followers whether socially conscious investing amounted to scam. Another finance influencer, Common Stock, warned profit seekers not to get duped. Quote, ESG is a marketing term that funds use to try to convince investors that they are investing in good companies, he said. Don't fall for it. ESG refers to a set of standards for a firm's behavior that guide investors on where to put their money. For example, by funding wind farms to combat climate change, while pulling out harmful oil and tobacco giants. The strategy gets more controversial when it guides funding to firms promoting diversity, equity, and inclusion schemes, which irk conservatives who say they help women and minorities by sidelining white men, which is absolutely true. This has spawned a fractious debate about whether efforts to make society fairer and cut carbon emissions are in the strategic interest for investors, by somehow mitigating risks of climate chaos and social disorder. Of course, there is nothing you're going to ever do with your investments, or we're going to do collectively with all of our investments, to mitigate the climate or affect social disorder. It's not within the investment community's power. This is all a scam. ESG investing boomed in the pandemic when the lockdowns caused energy prices to fall and buoyed portfolios that shun fossil fuels. Those same strategies have floundered as lockdowns ended and economic activity resumed. Sustainable funds faced a sharp slowdown in demand globally last year. even though they outperformed other funds thanks in part to their inclusion of technology stocks which performed well. Globally, funds classified as responsible investing recorded $68 billion of net new deposits in 2023 through November 30th, according to data. That was down sharply from $158 billion for all of 2022 and from $558 billion for all of 2021. So it's practically just falling apart. Professor Amit Siro of Stanford Graduate School of Business, another researcher involved in the opinion survey, said younger investors used to be bedrock advocates of socially conscious investing. Now, quote, they are much less willing to lose personal money to see progress made against issues such as climate change, sustainability, labor conditions, and diversity in the workplace, according to Siro. With their confidence down, investors are more cautious about risking their personal wealth to support stakeholder issues. You can buy into whatever the salesmen are trying to sell you. Of course, we're not going to change the weather based on our financial investments. Only salesmen would tell people that, and of course, it's not true. And that's what market insiders know. From Mail Online, market insiders ditch woke capitalism. 87% say funds focused on tree-hugging social causes will lose money. 2/3 write off ESG as a passing fad. Environmental, social, and corporate governance values divide opinion. They've morphed into political activism for the left. Wall Street brokers and other market insiders are turning on the left-wing investment strategy known as ESG or woke capitalism. And they're doing it in growing numbers, saying it's little more than a passing fad. A survey of Bloomberg terminal clients, typically big financial institutions, also found large numbers expected funds led by environmental, social, and corporate governance values to lose money this year. It comes as Republicans move against ESG funds in Congress and as consumers reject firms that champion liberal causes, evidenced by the wokelash against Bud Light's tie-up with transgender influencer Dylan Mulvaney. The Bud Light brand has still not recovered from the damage caused by the Dylan Mulvaney promotion. And, of course, Anheuser-Busch's terrible lack of response to the promotion without even apologizing over the promotion. The volume of sales for Bud Light is down by at least 30% by volume, meaning actual cans and bottles shipped, and manufacturers of glass bottles, as well as aluminum can plants, have had to shut down because they know the business is never coming back. Researchers found that 87% of 116 Bloomberg terminal clients who aren't directly engaged with ESG expect the sector's investment funds to lag behind market benchmarks for the coming year. The 181 terminal clients who work in ESG and have more skin in the game are also pessimistic. Fully 55% said the woke funds would underperform in the coming months. In a stark rebuke of ESG, 69% of respondents who don't work directly in the field called the strategy a fad, while only small numbers said it was becoming more relevant. Quote, these survey results are proof positive that the ESG scam is unraveling, Will Hill, director of consumers research, a policy nonprofit, told DailyMail.com. ESG is a grift and a fad which will underperform investment strategies that focus on serving consumers rather than woke policies. Blackrock CEO Larry Fink, an early champion of ESG investments, in June announced that he would no longer use the term, saying it's been misused by the far left and the far right. House Republicans held a series of hearings in which they called for quashing the Securities and Exchange Commission's efforts to enforce more transparent corporate disclosure rules of ESG-related factors. As well as taking on the SEC, GOP politicians seek stricter oversight of proxy advisory firms and also favor limiting or even excluding ESG-focused investments from some pension firms. Bloomberg also gathered comments from users of their terminals, which are costly multi-screen systems leased by traders and others to analyze real-time financial market data and place trades. Some say the strategy was here to stay. Others called it a politically driven ideology that has no place in a professional investor's decision-making. Quote, our job is to provide returns for investors, not change the world, wrote one respondent. Roughly 2/3 of those surveyed who are engaged in ESG said the backlash will likely force firms to abandon terms such as ESG as they continue to support efforts to achieve the same goals. Ultimately, though, a majority of all respondents expect politics to exit the conversation and be replaced by a more practical discussion about the future of ESG. Quote, participants of this survey are financial industry insiders, and they are increasingly realizing what we've been saying all along, according to Hill. We expect the collapse of ESG to continue, especially in the United States, and will call out BlackRock or any other asset manager when they are using other people's money to push their far-left political agenda. Also in the Daily Mail, woke capitalism's comeuppance, investments in trendy ESG assets collapsed by $5 trillion in just 2 years. A lot less of people's money is going into ESG. And at Fortune, they're trying to save the ESG industry. From Fortune, ESG critics must understand that woke capitalism is driven by supply and demand. No, it's not. It's driven by political people who don't care what happens to the investments they're supposed to be helping to protect. Let me know what you think of all this in the comments below. Always love to see your ideas. Please be sure you are subscribed to the channel. Click the bell for notifications, give me a thumbs up, and I'll see you again soon with another video. And if I don't see you, I will miss you.